Good afternoon, ladies and gentlemen. A warm welcome to you all, and thank you so much for joining the webinar. Hope you all are doing well. I am Sriram Subramanian, and it's truly a pleasure to host today's session. India Bonds, in proud association with NISM, is absolutely thrilled to welcome our esteemed speakers today. Today with us, we have Dr. Kapil Shrimal, an associate professor at NISM, bringing over 16 years of invaluable experience in academia. We are delighted to welcome Mr. Vishal Goenka, co-founder of India Bonds with over 20 years of experience in fixed income, currency, and credit markets. Mr. Goenka has held significant roles at various global investment banks such as Deutsche Bank, Merrill Lynch, RBS across London and Singapore. Today's session promises to be very informative as we dive deeper into the topic bonds versus other asset classes. And we also see how big is the Indian bond market. And with that, a warm welcome to our panelists. Over to you.
Yes, thank you, Shriram. So it is our endeavor at India Bonds and along with NISM, which is the premier institute for capital markets education and, as they say, capacity building. Very, very warm welcome to Professor Shrimal. The whole idea, we've been doing this series for a few months. The whole idea is to run through some basics and, as the topic says, to compare with other asset classes. But the most exciting part, I think, is the Q&A, and we did a large amount of time in the end, last 30 minutes for Q&A, and all our viewers can type in their questions, and they can start typing now, and then Professor and me try and answer almost all your questions and clarify doubts on, bond investment or other technical factors around fixed income or other asset classes. And so do make sure, and we want to make it as interactive session as possible. Over to you, Professor, to please take it up.
Thank you, Vishalji and Shriram. So first of all, welcome to all of you. I'm just going to discuss about some basics, characteristics of the bond market or what bond is. In simple terminology, when we say bond is nothing but an instrument which is issued by the company. So company, when issue the bond, they are known as the issuer or borrower. They borrow money from the public as part of the capital requirement. The face value of a bond, that minimum size any company or the one person can invest is 10,000 rupees, one can invest. So that is the face value of this particular bond. Once you invest the amount in the bond, the company is going to pay you some rate of interest. Generally, the rate of interest is fixed. It can be paid as a part of the frequency to you monthly, quarterly, half-yearly, annually, or if the discounted bond is there, zero coupon bond is there, no coupon will be paid, but it will redeem at par. Once the bond will be issued into the market, it will be required to take the rating from the rating agency. So when the G-Secs are there, it is a souvenir bond, so no rating is required. But yes, when the corporate bonds are there, so AAA is the highest, to the investment graded bond is BBB minus. Below BBB minus are non-investment graded bond. We'll discuss later on about the rating side also. At the time of maturity, company is going to pay you face value back. So whatever amount you are investing, the face value will be returned by the company to you at the time of maturity. Along with this, some coupon will be paid during the period of the bond. So this is a basic functionality. So it is nothing but your company is taking loan from you, pay the principal and interest back to you. Yes.
Yes. Yeah. So I can just add, as Professor said, let's keep the jargon away. A bond is nothing but a loan. Your friend Akash says, can you lend me 10,000 rupees for 1 year? I'll give you 11,000 back, which means 1,000 by 10,000 is 10% interest. A bond is just a security which defines this agreement because it's with you and a large company or a government agency, right? So, and as Sir said, the face value is the minimum investment in a bond is 10,000 rupees, 10% is the interest rate you get. And whenever the term or tenure or maturity of the bond, you get your principal back.
Yes. So now coming to how this cash flow fits with the same example, let's take an example. You invested 10,000 rupees in a bond and the bond is going to redeem after 5 years. So in the tenure of entire 5 years, the company is going to pay you for the 10,000 rupees, 15,000 rupees back. But this 15,000 is split into 5 different years. So in each year, company is going to pay you 10% of the coupon, that is the interest of 10,000 rupees, that is 1,000 rupees every year. And till maturity, again, 10,000 rupees will be paid back to you. So this is nothing but how this cash flow will be segregated with the example that we are going to discuss with you. So you're going to get coupon every year plus the principal back. So that is a simple cash flow structure of the plain vanilla bond that we can say.
So very interesting. We said we'll cover the size of the market, which people get not aware of. The bond market size in India is $2.7 trillion US dollars, which is a very, very large size. On the right pie chart, you will see the component or how iska breakup kya hai, right? So about 2.08 trillion is government bonds. Government bonds mein hota hai if the central government issues uh, a bond, it's called a GSEC or a government security. Uh, there's something called SDL, a state development loans. These are issued by the states but guaranteed by the central government. You think that's 25.74% of the total market size. Uh, Treasury bills is nothing but when government issues bonds under 1 year, they're called treasury bills. And if you see the corporate bond market, jahan pe sabse zyada interest, I think, for investors is growing at a very fast pace. It's at 602 billion in India. But very interestingly, अगर आप देखें on the left hand side, the small chart, in big developed markets like Japan, EU, America, the bond market is actually bigger than the equity market. So in Europe, though, the bond market is double of the equity market. In Japan is 187%. If we assume कि हमारा equity cap, our equity capital market cap is around 4 and a quarter trillion, we are a very small proportion of the equity market because we are a developing country. But as we go towards Viksit Bharat, as we go about to $8 to $10 trillion economy, I think the bond market is going to grow by 1 to 2 trillion in the next 3 years itself. ये हम आपको इसलिए बता रहे हैं because you should understand that the market, if you potentially invest in, is a very large market. Government security is regulated by RBI in the country, and corporate bond capital markets is regulated by SEBI. Please keep typing your questions. At the end, we will answer your questions. Now, one thing important in a bond before we move to comparing to other asset classes, credit rating. Everybody knows that to take a loan, आपको एक CIBIL score होता है आपका individual का. The higher the CIBIL score, the lower will the rate of interest that the bank is going to charge you. Credit rating is the CIBIL score for companies. The highest credit rating is AAA, which means lower interest rate, and then it goes on to AA. These are various metrics and different grades of risk. So obviously, triple B में आप जाएंगे तो it is it's called a high yield bond. We do not encourage retail investors to invest in triple B minus because they are very specialized, complex, or a weak balance sheet companies left to the banks and specialists. These credit ratings are given by credit rating agencies. In the bottom, you see CRISIL, ICRA, India ratings. All these rating agencies are regulated by SEBI. So basically, एक कंपनी को अगर बॉन्ड इशू करना है, if they want to issue a bond, an external credit rating agency talks about a financial strength and gives a credit rating. The agency is regulated by SEBI. All bonds that are listed on exchanges are regulated by SEBI. This is just to give you an idea how credit rating may returns kaise, how do they differ over a period of time. So government securities on the extreme left, they don't have credit rating. They're called risk-free because it's issued by Government of India. You can make 6.5 to 7%. AAA bonds, we've given some examples. This is not exhaustive list. There is no recommendation here. To just give you an idea, give you 7 to 8, AA gives you 8 to 9, single A gives you 9 to 11%. So as you choose any other asset class, अगर आप equity में invest करते हो, small cap, mid cap, large caps, you know the riskiness of each and the returns of those will be different. Similarly, in bonds, ratings will be the first check that helps you कि what range of returns should I expect, what should be my risk appetite. Obviously, you should do your own due diligence before that.
So now coming to the how we can compare with the bond with the asset classes. So here we are going to discuss about the 4 asset classes. They are prominent in India where the investors are investing more. So we are going to discuss one by one. First, we are going to discuss about the fixed assets, how the fixed assets and the bond you can compare. Okay, so as if in simple terms, if you'll ask anyone what is the fixed asset instrument, so they will simply say that is a fixed deposit. But yes, fixed deposits are not the fixed assets or fixed income securities. So when you compare with the bond with the fixed income security, the regulator of the bonds or NCDs is the SEBI, whereas the fixed deposits are of the bank. So it is regulated by the Reserve Bank of India. Uh, Generally, you will get on the bond from the lower side 7% to 12% return as a part of the yield that you can say. This yield can be the coupon also, or that can be the possibility of capital gain or loss also. But in the FD, as a current rate, you can say it is very between 6 to 7%. And the returns are fixed. These returns are not very, there is not an opportunity of capital gain over this particular part. The bond is again the diversification. When we'll say about the bond offer, the diversification across the issuer, sector, maturities, and various parts are there. You can decide the sector according to you. You can decide the issuer according to you. But it is fixed deposits are very concentrated towards the bank only. So you cannot do the diversification in the fixed deposit. When it's about the safety, the secured and it is backed asset, so it can be the secured bond, it can be the unsecured bond also. But FDs are generally unsecured. So if let's take an example, you've done the 50 lakh rupees FD with a bank and bank become default, it can be happen in at some point of time. You have seen the various examples in India and abroad also. So as per the DGCI guideline, the insured amount is 5 lakh rupees only, and the corporate FDs are totally unsecured. So no insurance coverage on the corporate FDs are there. Under the bond, there is no lock-in period. It can be tradable into the secondary market. You can partially sell the bonds units allowed to you. But as a part of the FD, fixed maturity date is there. If you pre-mature the FD, there will be some penalties or charges by the bank. The interest payout ratio can be payout in the bond can be monthly, quarterly, half yearly, as we discussed earlier also. At the same, you can do in the FDs also. Again, the loan or the collateral, so it is possible in the both of the side. You can take a loan against the bonds also, you can take loan against the FDs also. Taxation part, so capital gain tax will be there. If the long-term capital gain tax is there, it will be 12.5% if you hold the bond over the year. TDS on the coupon you're getting, that is a 10%, and interest is taxable as per your tax rate. And as a part of the FD, so FD doesn't give the idea concept of the capital gain to you, so there is no capital gain tax. But yes, TDS will be applicable, and interest is as per your tax rate slab whatever you have. So when it's about the comparison with the inflation, so real value of the return comparatively high to the FD, because we have seen the FD rate is giving 6 to 7% highest, and on the bond side it is starting from 7%. So it will give better advantages compared to the FD to you. So that is a comparison of bond and the FD. That is the first asset class is there. Vishal,
Yeah,
you
sir.
want to get on
Yeah,
this?
yeah, may I add? So, my opening line usually is that everyone is a bond investor in this country, and you don't know it. Why? Because FDs, everybody does in this country, your parents and grandparents. And there is a good benefit of doing FDs if you want short term money locked up for 6 months, 12 months, because that's the only thing we understood. Thanks to technology and this access to fixed income, you can actually make your returns work much higher. This is not a recommendation which is better. It depends on your risk, but bonds give you a lot more flexibility, and they are tradable. You can get out when you want, and things like that.
So now we are going to compare the second asset class with a bond. So that is a real estate where if we'll say about the investment, so most of the investors in India are investing in the real estate. So how we can compare with the bonds? So again, the regulatory for the bond, as we discussed, that is the SEBI, and for the real estate, the regulatory is the RERA. The returns on the bond will be medium to high return depending upon the credit quality. So as in the previous slide, we have shown to you, if you are investing in the souvenir bond or the triple A rated bond to the triple B minus bond, how the returns are there. And the again, return is a regular to the fixed income. When it's about the returns to the real estate, the rental income, generally the yield will be rental income can be 2.5 to 3% per annum of the value of the property. On the commercial property, it will be 5.5 to 6.5%. And again, the possibility of capital gain on longer time period. So if you hold the property for the longer time period, the possibility of the capital gain will be there. When it's about the cost of acquisition of a bond, so minimal transaction cost in the secondary market is almost negligible. That is 1 rupee for the investment of 10 lakh rupees. But when it's about the cost of acquisition of a real estate, so you have to pay the stamp duty, you have to pay the registration charges, you have to pay the GST. So it vary from 10 to 12% approximately. So very high cost of acquisition will be there. When we'll say about the investment size, so you can invest with a minimum 1 lakh rupee, 10,000 rupees in a bond to the 1 lakh rupees and the multiple thereafter. So 10, 20, 30, 40, something like that. And when you want to investment size in the real estate, so medium to large, depending on the city of a property. So if you are investing in the small city or small town, again, for residential, buying a residential house in the small town, it costing 40, 50 lakh rupees minimum. So that is a huge amount you have to invest in the real estate. Maintenance charges. So again, in the bond market, there's negligible maintenance charges. Only you have to pay the annual maintenance fee of the demat account. Whereas for the real estate, definitely you have to pay the high maintenance charges, and the societies are charging like anything that you have to pay monthly, quarterly, or annually. One time will be there. Liquidity bonds are highly liquid, so there is no like lock-in period. It is easily tradable into the market. You can partially sell also based on a requirement. Real estate is generally the low liquidity into the market. It is very time consuming. It is a tedious process, and the high ticket size investment is required when someone is buying. Again, we'll say about the safety. So all the settlement on the bond market is done to the clearing corporation. It can be of the BSE or NSE, or it can be CCIL when we say about the GSEC. And the safety on the real estate is directly the party settlement. So one party is settling to another party. So counterparty risk can be there into the real estate. So this is the various comparison on the real estate. So you can invest a minimum amount in the bond, but for the equity, for this market, real estate market, you would invest the higher amount. Vishalji, anything you want to add on this?
Yeah, I think, sir, you've covered everything. Very interestingly, you can use bonds to target a life event, right? अगर आपको लगता है कि I'm going to buy a property and real estate in 3 to 5 years time, and you want to keep that money safe, usually keeping in your savings account is the worst. That'll give you 2-3%. FDSB with the rate cut is going to give 6. So what you can do is you can invest in bonds to target कि I want to buy real estate, let's say in 2028, you buy a 3-year bond. So at maturity, you've earned, 8, 9, 10%, 11%. Next year, you buy a 1-year bond. So you can do things like that and use NCD also because real estate is a life event destination. But you can help that through real estate. Yes. I'll take this up, sir. So we're comparing against gold. Of late, gold has run up a lot, and India is the biggest consumer of gold, right from our mothers, sisters, grandparents. Everybody loves gold. Obviously, it is a hedge against inflation. बोलते हैं in classic finance, की inflation is very high. Gold preserves value. It's very liquid, obviously, in India, and considered as safe haven. Safe haven, matlab there is no market risk. Given the recent price moves, I don't know what market risk because it's difficult to decide now at this level to buy or sell gold. Anyway, let's move on. Again, NCDs are with SEBI. They are listed on stock exchange. Physical gold is obviously traded and it is. People can do ETFs as a proxy. This is not a class about ETFs or session about ETFs, so I will not go there. Uh, Gold involves a lot of storage and maintenance, fear of theft. Bonds are in your demat account. There's minimal charges to actually maintain bonds. Gold does not give you any return, right? Gold is you're hoping for capital appreciation. Bonds give you 8 to 10% return. So bonds help you to meet EMIs. People say, "अरे मेरी monthly EMI है." You can buy a monthly coupon bond, right? So you can match and gives you some return. Gold you're hoping for. Uh, Capital gains mostly. And the taxation is again written there. Short term is also at slab rate, long term is at 12.5% for gold. Physical gold, you can invest from anything to anything. We will show you a chart later about how returns on these asset classes have happened. Will give you an idea as to how to invest or how to think about investing in this. Obviously, our favorite equity. I think almost everybody on this call, if you're a student, if you are in your investing journey, would have done equity. Equity is an ownership of the company. Bond is you are a lender to the company. Equities may we expect high return, classically 12 to 15% return people expect. Obviously, India saw a great post-COVID story, which the world saw from 20 to 24. India grew a lot. Of late, we are seeing little more volatility. Uh, and there are automated processes of investing through SIPs and things like that. What's the difference? Both are regulated by SEBI. Bonds give you a defined, stable, regular return, relatively low risk. Uh, Equity does not give you fixed return, higher risk, but could have much higher returns. Higher risk, higher return. I mean, that's the balance. Bonds are usually secured against asset. So, and you get your principal back. Equity is you're betting on the growth of a company. There's no security against your equity. It's linked to market movement. Bonds are predictable, definitive cash flow. Equity, again, it's about capital returns. In bankruptcy, which is the most important thing, secured bond holders are first in line. मतलब क्या होता है? If a company goes bankrupt, uh, and they owe 100 rupees to the world, then you sell their assets, and secured bondholders get their money. Usually in bankruptcy, shareholders get nothing. So because you're owner of the company and lenders get more money. Bonds where there are risk, interest rate risks, but bonds are not typically affected by the volatility of the market. In fact, Western world mein to, if there is markets are volatile, bonds rally. So they give you a good diversification benefit on your portfolio. If equities become volatile or falls a lot, bonds are very stable as such. One question caught my eye. Bonds and debentures are the same thing. उनका खाली nomenclature जो हम नाम लेते हैं, they are different. Debentures or NCDs are usually, many years ago, we used to talk to corporates who issued bonds were called debentures, and government was bonds. Bonds and debentures are one and the same thing. Bonds where liquidity is not very high, is low to high. So if you buy government security, AAA, AA plus, liquidity is very, very high. और अगर आप सिंगल ही रहते हैं तो there's a reason you are getting 10 to 12% risk. Liquidity could be lower. Compared to equity, liquidity is very high in mid cap, large cap, small cap में also liquidity and gap risk काफी रहता है, as you know that, right? Let's move next. Very interesting chart. I will speak on it, then sir will speak on it. This is actual data from public sources of returns on different asset class in the last 10 years. So हमने सारे asset class को par की value दी है at 2014, and where are you in Jan 25? So the red line that you see is the Sensex, which moves up and down. So you see equity is a volatile asset class. So, you have to be there in the long term. It's volatile. Suddenly, if you need money, emotional, whatever, you don't know, is gone from like 100 to, let's say, a graph of 350. That's the Sensex. Real estate, if you see, is it grows, but क्या है, we all need, India में, you need a house, makan, but the returns have not been that spectacular. Obviously, real estate depend करता है which area, city, town. So this is a consolidated return. People who invest in SBI FD, look at your returns. You might have doubled your money in 10 years. अगर आप 6-7% पे करेंगे तो आप double भी नहीं कर सकते हैं. We hardly, I mean, I think it's not a use of. If you take an A-rated bond at 12%, okay, if you see that's the smooth green line. If you see it is very, we are at a very interesting spot where gold, and if you, the blue line is the gold, you see gold was not returning that much from 2014 to 23, only in the last year or two. And I have reasons for that, right? Whether fear of inflation in US, because of the geopolitical, global political जो situation है, भले रशिया यूक्रेन में था, फिर इजराइल में, फिर इजराइल ईरान, तो gold goes as a defensive asset, has really rallied. All three of them now are at the same returns point. Gold, from being a low returning asset, rallied a lot, gave you a very good return. Equity gave you a very good return, but it was very volatile. But if you took a little bit of risk and invested in a 12% bond, it gave you the same return without the volatility, without that consistently building over a period time. So very interesting, sir. Aapke comments on this different asset performance in India over the last 10 years.
Yes, so definitely, Vishalji, if the slide is very, what we can say, ice-breaking, someone will think what bond market is going to give me. It is very negligible return, or only 12% in equity. I can get 20, 25, 30, whatever the influencers will say, depending on their part. But yes, you can see at the level today, if you invested 100 rupees at 2014, the gold, equity, and the bond all are at the same level. if all are at the same level and without taking any risk, without holding, without keeping a locker with a bank, without taking a pen of market is going up, market is going down, then bond definitely it is a safer investment for you and much more secure over the period of time. So that is a part of the bond market, and you can see why as the previous slide even Vishal ji has discussed, the European market or the Japanese market or the American market is having a huge size as compared to equity, because they are tried and tested. If we invest more into the bond market, we are much more secure for the futuristic part. So that is a part where the investors has to think of for investing into the fixed income securities. Definitely. Yes. So now when we come about the portfolio allocation, so this is the one of the idea that we are going to discuss when we'll say about to any ideal person, what is the investment you have into the market. So we generally say I invested out of 100 rupees, 60 rupees in equity, 40 rupees, 10 rupees in gold, and 30 rupees in real estate. Now when it's about 30 rupees in real estate, logically that 30 rupees you're not invested in real estate, you're taking a loan from a bank, so you're getting LBOs, you're taking that house on a loan, so you're creating a debt only for you. So that is one of the part. But yes, they'll say that is my asset, so I'm just allocating my funds to that asset, so 30% allocation. But ideally, in your portfolio, there must be a component of the fixed income instrument also. So if you can reduce the size of equity from 60 to 40, an additional 20% you can give to the fixed income security. So well diversified portfolio will be there. So you're investing in the gold also, you're investing in the real estate also, equity also, and fixed income also. Again, further, if you want to diversify this part like fixed income into the GSEC or AAA rated or AA rated, whatever the rating you want to test per your risk profile, you can further diversify your fixed income portfolio also, or the equity and something like that also. But that diversification is always required to create the ideal portfolio for the life.
No, absolutely. I think wealth creation over a period of time, जो आजकल लोग काफी बात करते हैं, a lot of people talk about that, is done over a considerable amount of time. Only if you have a balanced portfolio, do you survive volatility, do you survive market going up and down or some great shock events, and yet make solid returns, right? Because in a diversified portfolio across 3, 4 asset classes, once you learn about them, is a great idea to be.
Yes, yes. So now coming to risk, because as Vishalji started the thing, investment in securities subject to market risk. So risk is always there when you're investing in any of the security. The first risk we'll say about the liquidity risk can be there in some of the fixed income security where you are investing to very low rated bonds. So Vishalji also talk about the riskometer when don't invest triple B minus or below that, because that type of instrument may have the liquidity risk for you. Okay, when the liquidity is, it means you're not going to liquidate your money. So that risk will be there. Again, if you're buying a bond from the unlisted bonds will be there, or from the platform which are not regulated by the SEBI, so there will be chances of fraud with you. So fraud risk can be there in the bond market. Again, the market risk is huge. So market risk can be linked with the interest rate risk. It can be risk will be associated with the geopolitical risk. It can be associated with the volatility also of the part. So whenever the interest rate changes, the price of the bond will also change. So market risk can be upside also. It can be downside also, depending upon the policies of the government. So if let's take an example, Reserve Bank of India recently reduces the repos by 50 basis points. So it affects the price of a bond. If the interest rate will go down, the price of the bond will go up. So that is what we can say inverse relationship in the price and the yield of the bond. And yes, the credit rating risk. So if you invest into triple rated bond and due to some fraud or due to some management issue or mismatch in the financial records, suddenly rating agency change the rating from AAA to D, or companies not paying the coupon to the investors, the rating can be changed. So in that case, the rating risk is also, credit risk is also there into the market. So these are broadly risk that is associated why we are investing into this fixed income security. But when you invest, all of you, that you have to properly do the due diligence, you have to understand your risk profile and invest into this market. That is an important part before investing into the bond market.
Yeah, sir. Maybe I'll add 2 points. No investment is risk-free except government bonds in the country, theoretically, right? So I think पहले ये notion था, people thought, अरे bond है तो safe है, मतलब, everything comes with a risk, that's to get a high return. In fraud risk, I will just want to highlight 2 points. Uh, now as India Bonds is one, you have a SEBI, we are SEBI registered online bond platform. There have been situations in the country where people buy fixed income bonds looking at 16, 18% return. Please check the platform or the app you are buying is SEBI registered or not. And people make it very funny, right? Saying we follow SEBI policies or SEBI process. That means nothing, because if you're SEBI registered, you have to add your SEBI registration number. The thing is, if something were to go wrong, you go to the country's regulator and you can ask, you can demand an inquiry and do something. Everyone who's SEBI registered has regular annual audits and things like that. So you get a layer of safety from regulator. So fraud risk से बचाने के लिए, to save yourself, do not buy from platforms which are not SEBI registered. Secondly, just buy listed bonds. Just make sure. Listed bonds again are listed on the exchange, regulated by SEBI. If you buy bonds which are unlisted and something were to go wrong or fraud in the companies, SEBI will not help you and will not offer you any help, because listed unlisted bonds should not be invested by retail investors.
Yes. So yes, so as
Okay,
by you,
so
we'll give half an hour for the Q&A. So exact half an hour we are going to.
thank you, Kapilji. We have about 40 questions already, so we'll run through them. Okay, so now is the most exciting and interactive part. Okay, one is a tech. First question we have. If you submission of 15H forms. Okay, so 15G and 15H forms are for people not to deduct tax, right? So in bonds, if you are a senior citizen or you're eligible for not for tax, you can submit a 15G and 15H form to the issuer. So when they pay you the coupon या interest rate, जब आपको pay करेंगे, tax नहीं काटेंगे. All I can say very humbly, Mr. Deepak, you can go on our website. We have a page for 15GH. Whichever company bond you've invested in, we've put for public to see. You can write to that company and email to that company and get your thing. You can download these forms also. Okay. I understand overnight bonds are good if you want to park money for short period. I want to know how advantage as compared to other bonds. Kapilji, if you want to take the question, it said short-term money, I understand. Then what is the advantage of buying short-term bonds versus overnight funds?
So overnight funds, again, when we say about the overnight funds, as a retail investors directly, as per my knowledge, you cannot invest directly into the overnight funds. But for the corporates, it will be there. Okay. And the what we can say, the overall yield on the short-term bonds or the funds, especially the T-bills that RBI is issuing, that you are going to get more as compared to that particular part. And if you invest into the, let's take an example, any the overnight mutual fund or liquid funds, so again you are getting the high yield risk compared to the fixed income.
There's a question, sir, for startup bond or equity loan. Sorry, I'll answer. I don't know what the question is. कि वो तो आपके startup पे depend करता है and depends. But we see a lot of startup, when you've raised money, the treasury invests in bonds rather than in equity because they want to keep the money safe and think. Next question, is there any simple way of understanding sensitivity of bond price with interest rate change? मतलब, when interest rates move down, uh, I think a simple way, again, I'll take this, is very easy. If you give your friend 1 year loan, you think it is more secure. But अगर आप अपने friend को 5 year loan दोगे, you don't know what will happen in 5 years. You want to charge him an extra rate. So just think the short end bonds are less sensitive to interest rates. 1 year, 3 to 5 year, the longer bond that you go for becomes more volatile to interest rates. People asking, can we get this as study material? This will be put on YouTube channels of NISM and India Bonds. Taxation, I think we've covered. Question, do bank FDs also get any ratings like bonds?
No, no, I don't.
So bank FDs ne unke short term, nahi, I don't think, I think NBFC FDs do.
NBFCs are there ratings.
And banks have ratings at the issuer level. तो आपको उसको follow करके you'll have to track it. What is the potential of bonds in wavering international relation? As example, recent tariff war, if destabilization happens. Very good question, Antarjot Kaur. Typically, आपने COVID में, if you see in COVID or financial crisis, bonds rally because everyone goes for the safety of bonds. So, अगर आप बोल रहे हैं कि there's destabilization in world economic order, then typically people do not buy risky assets like real estate or equity and go for bonds. And bonds actually rally and give you a lot of capital gain. So the role of bonds to safeguard in crisis situation is always there. This is always a question about DHFL, CFD, which defaulted, sir. You're very right, Mr. Prakash. India went through a different series. जो India 10 साल पहले था अभी है नहीं. In 2018, 19, 20, lot of cleansing in our system and structure has happened. Uh, People don't remember when Nifty was 5,000, right? So DHFL has happened, but the country regulation has really improved after that. The way you do listing of bonds, the regulator, there are trustees which send emails if something goes wrong with your issuer. There are credit rating agencies which have tighter regulation. There's more transparency in the market. So I think that was a case of fraud which happened. Next question, sir. In future, bond yields reducing year on year. I did not understand this question, but sir, if you can answer, if the bond defaults, how do we recover?
So if the bond defaults, again, you have to understand whether the bond is senior secured, secured or unsecured bond. So the generally bond doesn't secure, there is a company default will be there. So the underwriter of the bond, that is the debenture trustee, that will say. So debenture trustee will play an important role to get your money back. So they will generally play a mediator between the investors and the company, that we can say. So they will do the due diligence again. They will file the all the document to the regulators if the liquidation is required of the company, and they'll do entire process. And then based on the category, the money will be given to the investors.
Yeah, so there have been bonds that defaulted. There is something regulation called Indian Bankruptcy Code, which came in 2016. According to that, there are special tribunals called NCLT, which is tribunals created out of the judicial system कि आपको कोर्ट रेगुलर कोर्ट में नहीं जाना है, आप उस ट्राइब्यूनल में जाइए, where there is an entire process defined in the country for recovery of the bond that happens there. During IPO, if bonds are issued on first come, first serve basis, what is the logic behind oversubscription? Very good question. Maybe I'll answer this. Actually, we have two IPOs live on India bonds. Muthoot Micro and Adani Enterprise. Second time they're coming and doing an IPO. So what happens is bonds are issued for IPO bond में public issue में it's open for 3 or 4 days. So first day, normally what happens, the oversubscription will happen on the third or the fourth day. So it's best to apply on the first day. The day the oversubscription happens, issues close on that day. And people who have applied on that day will get pro rata allocation. So suppose 500 crore ka issue hai, 400 crore has been subscribed and 200 crores come on the last day, then people will get 50% allocation. So oversubscription is a term कि अगर last day में more than required has come, yeah. Someone Gold MFs and ETF give you phenomenal returns. I agree, Leena Dhupet. I wish I had invested in gold a lot, but as I said, it has rallied a lot. I don't have a view on gold. Questions when the certificate of participation will be shared. Certificate is going to be sent by NISM in 2 to 3 working days after this webinar. Is it possible to reinvest the returns? Absolutely. For bonds, when you get a coupon payment, you should buy another bond or another asset class.
And that is the best way to.
Yes, yes. What is your opinion about FD in small finance banks who are offering as high as 9%, keeping it capped at 5? We will not give opinions and advice here. We will share our personal views. Do not take it as any investment recommendation. I think, as we said, कि आपके पोर्टफोलियो में सब कुछ डाइवर्सिफाइड होना चाहिए. Small finance banks, you see their ratings. Obviously, they are regulated by RBI and they have 5 lakh guarantee of DIGC. So you should, people should allocate 5 lakhs for high rated FDs, but do also study about the bank. How people are asking about comparing with bond and equity. This is not about different sectors of equity, mid cap,
Okay.
flexi cap. We're not going to go into that detail. One question, sir, you said bonds can give you 12%. Please specify. Sir, you can go on websites, India bonds पे भी जा सकते हैं. You can choose. Obviously, interest rates have been cut just now. So per 11 and a half, 1175 is available. Very good question. In the long term, bonds you said give same return. How do we know when to enter and exit? I think I think agar hame Kapil ji and I knew that, we may not be doing this session if we had timed that market so well. No, yeah, but very good question. For bonds, you have to keep in mind ki interest rate cycle kya hai. Interest rate cycles move in 3-4 years cycle. Matlab, either the central bank will raise interest rates for 2-3 years, keep it static, and then they will cut interest rates for 2-3 years. In India, we hiked rates from 21, 22, and we kept it at 6.5 RBI rate for 2 years. This year, we've started cutting rates. So we do think that in a good interest rate cutting cycle is good for bond investment. You can make capital gains. And I think the rates will go lower or remain same for another year or two. Secured versus unsecured, what is the difference in bonds, sir?
So secured bonds are generally considered as the underlying asset that companies having. So we can say it is mortgage-based security that we can say. So some securities are there. So assets are there on the secure bond, where unsecured bond doesn't have any asset underlying with them.
Yeah. The question is, sometimes secured says 2.6x, 1.8x. What does that mean? So secured bonds, when it says 2.6x, it says the amount of your issuance is covered 2.6 times by a security or 1.8 times x by a security. मतलब आपने किसी को 100 रुपया, if you've given 100 rupees as loan, they're saying my car is worth or my phone is worth 180, which means you're 1.8x covered. Is it safe to invest in secured NCD with triple B rating? Triple B is at the lowest rating spectrum. Safety is your risk appetite. This is not a recommendation. We say the same thing as Professor said. Do your own due diligence. Triple B minus are a little riskier side of the investment grade, and nothing comes without risk. You should understand the company a little bit, ask some questions, basic questions to understand. There are questions about other platforms. Sorry, we cannot comment. How a senior citizen who's 20% income tax slab can save by investing in bonds? I think from a taxation, we are not tax experts, so we can't. But senior citizens can fill 15GH form, तो उसमें आपका tax TDS नहीं कटता है, and then the returns are at your slab rate. But sir, as a senior citizen, I think risk appetite goes down. You want to conserve your capital, you want to conserve your wealth, and bonds give you a good form for that, earning you regular and stable income. Can NRI purchase bonds? Yes, NRIs can. There are a lot of NRI questions. Can purchase bonds. The tax is a little different. I think they're taxed higher than the TDS. Again, you can write to us, start a chat, contact us at India Bonds. KYC is a little lengthier process because you're sitting outside the country. Is it better to be single investor of bond or join mutual funds of corporate bond? Question to you, Kapilji, direct bond investment versus debt mutual fund.
So again, the best answer is that when you are good into your own portfolio management, that is one of the parts. So the direct investment in the bond is always good, because if you compare the debt mutual funds, they are going to charge some expense ratio for you. So when you're buying the direct bond, so that expense ratio is not going to bother you. Number one. Number two, you have to understand what is your investment size also. So if you want to invest, let's say 1,000 rupees per month, so then the investing 1,000 rupees per month is not possible in the bond market, because minimum 10,000 is required. But if you're investing through mutual fund, 1,000 can be possible for you. So that depending upon the investment amount you are investing and how we are aware about the funds.
Yeah. Interesting question. Why is YTM of same bond different on different platforms, sir? It's everyone's choice. I always say you should compare prices before you buy. Depending on which city you are dialing from, आपको भी पता है, you also know that if you want to buy a television or a bicycle, there might be different prices on different places. So do your comparison. It depends how much margin platforms want to keep. It imagine where they want to source from. Can I invest in bonds in long term? Absolutely. You can buy up to 10-year bonds, and it's very good if you have money. Ki bhai, I don't have to worry, I have a steady return. It's going to be very good.
Even in India, 50-year bonds are also there.
Yes. Yes.
These like 50 years are also there.
And as adding to Kapilji, again, a question, what is better, bond or debt fund? Bond, you can be in control. Like on India bonds, we have something called bond case. So for people who say, I don't want to buy a bond, You can select a strategy कि मुझे high yield bond portfolio चाहिए या bank bond portfolio. You can buy 5 bonds in one go and make a portfolio yourself. Doing it yourself, you'll always, I think, earn a high interest rate than only going for a fund. I am trying to read the questions. We still have 50 questions, very good questions coming. I am not going to talk about, keep asking, suggest platform for where to buy. Okay, just because we are India bonds, we are regulated, we would recommend, I think we have a large choice of bonds. Please come and try. Can analyze, invest with so many types of bond or the government? How does someone decide which bond to buy? There are so many types of bond. You're very right. There was a slide we had for people who want to start investing, buy a government bond. You can start investing from 10,000 rupees, right? So understand how bonds work and then go for corporate bonds, give you a high return. Tax-free bonds should be bought by HNIs and ultra HNIs. If you're at the highest tax slab bracket and you want to buy tax-free bonds, that might save you. Can proprietary firms possible to invest in bonds? Yes, as a company, as a corporate, you can do a corporate KYC and you can start investing in bonds. Public charitable trusts allowed to invest in bonds? Yes, trusts are also allowed. There's a separate trust KYC that you can do, and you can do that. I am trying to hurry through the questions. Investing in short-term T-bills 90 or investing in FD which with banks which is better. T-bills will I think give you much lower return than FDs in the 6 months time. So you should actually invest in or park your money in FDs. T-bills give you liquidity. You can sell anytime you want. And sometimes FDs have penalty or lock-in clause.
But again, some banks can provide equivalent to the T-bills rate also, some point of time. That you
Yeah,
don't
sometimes.
you do the process.
Is India Bonds app available outside India? Thank you, sir. We already have 75,000 downloads, but as of now, only in India. A couple of countries we've started. Very soon, we'll roll it out globally. What is the main difference between bonds and debentures, sir? There is no difference. It's the same thing. Debenture is a name used for corporate bonds who issue. Yeah.
So it's just like Akshay Kumar and Khiladi. That we can see. Both are there.
Someone saying, so you said state government bonds are secured. No, sir, we did not say. We said some bonds are secured and some are unsecured. Unsecured bonds are usually issued by very large companies or by state enterprises because everybody understands the state. There are also state guaranteed bonds or state by state enterprises. There are guaranteed secured bonds also. So there are two kinds, and you should read the fine print. Why T-bills or yield are decreasing? There are two reasons. RBI cut rates aggressively and there's a lot of liquidity in the system. जो हम कहते हैं, it's more technical, and that's why people park the liquidity in short end term. Why do bonds issued at par trade at premium or discount? Do you want to take that question?
So again, the bond generally issued at par, that we can say, but if you'll see some the reissue of a bond, it can be issued at the premium or discount also, depending on the yield that bond is going. And trade and premium and discount is based on the yield. So the relationship between the bond price is if yield is higher than the coupon rate. If yield is higher than the coupon rate, the bond will trade at discount in the market. If yield and coupon rate is same, it will be traded par. And if yield is less than the coupon rate, then it will trade at the premium into the market. So yield will be totally affecting the price of a bond. So you have to understand what it is there. So for example, 100 rupees bond, if the coupon rate is 10% and yield is let's say 11%, then it will always trade at less than 100 rupees. So that is in concept.
Couple of technical questions, good questions. Can I buy from my current Demat account? So typically on India bonds, when you do KYC, you can attach any Demat account. You can buy in any Demat account in the country with any broker that you have. You don't have to open a Demat account. And an interesting question, where does my money get credited? So when you do KYC, you link your bank to your Demat account. When you buy a bond, the clearing exchange, like you buy equity, how does the company know that dividend to be paid to you, right? So the company actually knows your bank account attached with your demat account, and the bond coupon comes directly to your bank account, which has been in the KYC. How to start investing? I'm new. I have lack of knowledge. Well, good start. You're attending this session, which means you are building your knowledge base. Please read. We have a bond university also in India Bonds. You can search, learn about it, and start your investment journey. We are not done yet, sir. We have another list of 20 questions. We had two chats open, so I'm going to try and address on the open chat now. We still have time. We'll carry on. We'll answer all your questions for people who want to be here. Uh, Can I invest my money in bond to say better than FD? Yes, you can invest your money in bonds which are better than FDs or give higher returns. Please invest depending on your risk appetite.
That is required.
How do we get a record? Okay, this I think our colleagues are typing that you can get into YouTube. There is no PowerPoint that we can share. Your certificate will come in 2 to 3 days time after this. Someone said we're not clear about tax for senior citizens. Again, we are not tax advisors. Senior citizens can fill in a 15G, 15H form. Just say the interest coupon, there's no TDS. You still have to pay tax as per your slab rate, but your cash flow improves because you don't have to pay the 10% TDS that you have to pay. SEBI will not accept unlisted bond inquiries, then who will? RBI or MCA? Sir, very good question. We're not, unlisted is a private deal between you and the issuer, right? You can't control everything that happens in the country, who you want to lend money to. And RBI is not a purview of corporate bonds. MCA, yeah, you can write to the MCA, Ministry of Corporate Affairs, but they're not capital market regulators. So my humble suggestion is do not buy unlisted bonds, please.
And in the past, even unlisted bond investors have suffered a lot.
Sir, even today, like 2, 3 months ago, we can't take names, but one of the EV firms, they defaulted, unlisted bond, nothing. Investors have no recourse to go to anybody. When bonds are bought on India Bonds platform, can they be traded in exchange? See, when bonds are bought on any platform, they go to your demat account. And after that demat, yeah, you can trade on the exchange, you can trade on any other platform. It's like equity. You might have multiple equity accounts. आपने equity एक platform से खरीदा, you can sell on another platform to the exchange. Why is the same issuer rating different across different rating agencies? Very good question. Each rating agency is an independent body and they have their own opinion on what the rating should be. And sometimes we see a difference. We don't see a very big difference usually, one notch difference. So could be AA or AA minus, A plus or a single A. Usually more than 1 or 2 rating differences nahi hota hai. But this is the rating agency's opinion and they are perfectly allowed to express their opinion. If RBI cuts repo rate, how will bond yields be impacted, sir, to you?
So if RBI cuts repo rates, it will be impacted that the bond yields will go down. So that is simple. Rates are going down, so bond yields will definitely go down. So that is a interest rate effect. That is market risk that we was discussing. So interest rate goes down, so bond yield definitely go down into the market because the price of the bond is going to increase.
Yeah. One question, bond platforms give data for particular bonds. How correct is the data? So, sir, all bond platforms, including India Bonds, is regulated by SEBI. There is now a certain structure and framework given that there is a minimum amount of data that you have to give, including rating reports, information memorandum, what are the ratings. They are usually, every platform is different. We use data from central repositories of the country, so national repositories, and they should be trusted. In case you find any discrepancy, you can write to SEBI on scores and complain about any platform. But yes, we are regulated, so at least from India bond side, we have a lot of safety checks that our data has to be absolutely correct. Your views on risk of reinvestment in bond looking to in the falling interest rate scenario. Kapilji, do you want to take about this and talk about laddering maybe? Yeah. Hmm.
Yes, so definitely, when the interest rate falls down, so what you can do, that will create a strategy for the ladder that for the investments. Okay, so you can invest your amount for the various maturities. So you're entering it today, and you can mature after 1 year, 2 year, 3 year, 4 year, 5 years. So this maturity will give the ladder or the staggered part of your investment to you. That is one of the opportunity can be there, or you can what you can do again. What you can do that you can reduce the risk of one maturity period. There's a bullet maturity that you can say. So that will help you always.
Yeah, keep investing every year so you do not have interest rate cycle. Quick questions. I don't want the return to be credited to my account. Instead, invest in the same bond. Is it possible? It is sometimes not possible, Mr. Pratap, because what happens is bond, unlike equity, has a finite issue. मतलब एक 100 crore का bond होगा या 1000 crore होंगे, and the liquidity might not be able to reinvest in that as such. One person is asking if I buy a 10-year bond, which means I can't sell for 10 years. No. Bonds, listed bonds that you buy, there is no lock in. You can buy today and technically sell tomorrow if you want. So, one good thing bonds versus FDs is that if you need the money, there is an exchange. You can go to your broker, you can come to our platform, request for quote, and sell your bonds. India Bonds does not charge, somebody is asking, charge anything customers to buy. One person is asking, I have, it's a particular small finance bank's name. I will not take the name. Should I move my money from their FD to their bond? It seems higher return. Again, please remember FDs are different. They are DIGC, Department of Insurance guarantee for 5 lakhs. Bonds issued by the same bank are subordinated. They give you high return. So you are there with the same issuer, but you're a different capital structure, right? तो आप FD में senior unsecured से आप subordinated में जा रहे हैं, and that's why you're getting paid. Can I sell a bond on the platform? Yes, you can come and request for quote to sell the platform. I know we are hitting 5, but we like to answer all the questions because this is an education effort. So we may overrun by 5-10 minutes. Kapilji, I hope that is okay by you.
That will be definitely okay.
Some compliments are coming. Amazing detailed session. We can't give you PowerPoint. It'll go live on YouTube channels for NISM and India Bonds. Are all bonds available on India Bonds listed? So one more important, all SEBI regulated platforms like us can only deal in listed bonds. We are not allowed to show unlisted bonds by the regulator. So safely you can assume any SEBI regulated online bond platform, including India Bonds, has only listed bonds. So that check has been done for you. Okay, we have last 3-4 questions. Maybe we finish that. We've had a very good session. Can RBI Retail Direct be used to invest in bonds? मैं ये लेता हूँ. I think RBI Retail Direct is an amazing effort by the government to invest in bonds. So yes, you can only invest in government bonds and treasuries and SDLs on RBI. There is just one significant difference when you invest with RBI Retail. Your ownership of the bond is noted in the ledger of RBI and you're given a note for that. When you invest in a government bond through an online bond platform or through a stockbroker or whatever, then you can see those government bonds in your डीमैट account. तो आपके वो सारे इन्वेस्टमेंट के स्टेटमेंट में एक साथ आ जाता है. If I if I use HDFC DMAT and buy through India Bond, do I have to pay twice? No, sir. Whatever HDFC charges you, India Bonds does not charge any brokerage or any charges to investors on our platform. How will I come to know which bond are listed or unlisted? Again, because sorry, regulatory matter है तो I want to educate our views. If you are buying through a SEBI regulated platform, they can only show listed bonds, so you are sure there is not listed. Which bonds are unlisted? you can actually search. So India, हमारे यहाँ India bonds, we have a bond directory open to public. If you know the ISIN number or the issuer, you can actually search on our platform to see it's listed or unlisted. There are government agency platforms also. I would just humbly recommend first-time investors or even seasoned investors, unless you are really a champion in credit or corporate bond investing, do not buy unlisted bonds. Do not buy from unregulated platforms. Do you, last two questions, is there physical certificate for bond investment? I think the regulation in this country is moved to only demat for securities. आप equity भी आप physical में नहीं रख सकते. If you're investing or bonds, it is always in your demat account. People are asking, state your YouTube channel name. I think it will be called NISM, sir, if I'm right, or National Institute Securities Market.
NISM.
Yeah, NISM you can search, or you can search India Bonds on the YouTube, and you'll find both our channels. I think with that, we come to the end of questions. We took more than 100 questions in 35 minutes. I hope for our audience, we've been able to answer. Audience, please give your comments. Did everyone enjoy a session? Up in the chat, we would love to get your feedback. Please share your comments. If you like this session, it encourages us and NISM to curate more. We run a monthly session on these. We'd love to get your feedback. Over to Shriram.
I'd say it's been a fantastic session and already saw great feedback and some very, very interesting questions, to be very honest. A huge thank you to Dr. Kapil and Mr. Vishal for your time. To our amazing audience, make sure to follow India Bonds and NISM channels to stay informed on any upcoming webinars and more such educational sessions. If anything else comes to your mind, feel free to reach out to us. And thank you so much. Signing off for today.
Thank you, everyone. Thank you, Kapilji, everyone.
Thank you, Vishalji. Thank you, Shriram.
Have a great weekend,
Thank you,
everybody.
Dr. Thank
Thanks
you.
for joining.
Bye.